This is Robert Sinn at the May 2024 Metals Investor Forum in Vancouver, Canada. I'm with Craig Parry, Executive Chairman of Vizsla Copper. Craig, it's great to be here with you today.
Lovely to meet you, Robert. Yeah,
I've come here for some confirmation bias from you, so I hope you can, appease me. I'm a big copper bull, really big copper bull. Pounded the table many times in the last year, including at the January MIF. So far, it's working out pretty well. We've had a tremendous run, $3.75 a pound in January, $4.69 Friday. Incredible run. And there's a lot of drivers. I'm interested to hear your macro take on copper and how big these deficits might get.
Yeah, well, it's my favorite topic. I love copper. I'll start with the highlights. I wonder who's a bigger bull, you, me, or Robert Friedland, but I think we're going to see $20 to $30 per pound copper in the next few years, and we can get into the details of why, but I'll start you off with this tidbit. They're talking about these AI data centers in the US doubling electricity demand in the next few years by the back end of this decade. Well, how does that make sense? How could that be? But if you look at the detail, an AI search uses 10 times as much electric power as a simple Google search. So that sort of gives you a bit of a hint as to why we're going to need more power and more conduits for that power, of course, which is what the copper is. So copper's so crucial to what's happening. Why do I think that we'll see $20 or $30 a pound copper? The market's incredibly challenged. The demand profile is growing extraordinarily, and we're seeing, even in a sort of weak market and weaker global demand, a strong rise in the copper price. But I think that, demand in an absolute sense is going up by 7 to 8 million tonnes per annum by the back end of this decade. Of course, the market today is about 22 or 23 million tonnes. So we're going to see 30 million tonnes of demand by the end of the decade. That same increase, 30 to 35% increase in demand, was what we saw from 2000 to 2012, which was, the metal market rose from 14 to 20 million tonnes per annum. That was enough to drive the copper price from when I started working with Rio Tinto at 70 cents all the way up to $4.70 10 years later. Same demand drivers. Of course, now we've got a challenge where the supply side is so much more constrained. In the last 13 years of this downturn, not enough permitting work's been done, not enough studies, not enough development. I simply can't see where we're going to see another 7 to 8 million tonnes per annum of metal production come from. It's not out there. So, if we see 2 or 3 million tonnes, that's great. That can come on over the next 5 or 6 years, but there's still going to be a massive deficit. So, and of course, we know that metal prices, when you have that level of imbalance, rise dramatically. So I wouldn't be surprised if we see the copper price go from $4.64 today all the way up to $20 to $30 per pound. So watch out for that. You want to be long copper, and that's what we're trying to do at Vizsla.
Well, yeah, you're right. Robert Friedland is the biggest copper bull in the world. I thought I was number 2, but I think I'm going to have to say I'm number 3 now. You're number 2 with that price forecast. I was thinking $10 a pound in the next several years is very possible. It's not certainty, though, but it's very possible. Goldman Sachs actually raised their price target to $5.50 a pound by the end of 2024 and 7 and change by the end of 2025. That's pretty bold. I mean, if copper is going to go from $4.60 to 7 plus in the next 18 months, there's going to be some big money made in copper juniors, copper explorers. So let's talk about your company. So, Vizsla Copper, porphyry copper in BC. Tell us more about it, and why should I be an investor in the company?
Yeah, so what we're doing at Vizsla Copper with that sort of mind frame, the copper prices will rise dramatically. At our team at Vizsla Copper, we've kicked the tyres on over 400 projects globally over the past few years, looking at making acquisitions. That's another point on the supply side. There's not many good projects out there. So we've come home to British Columbia. We see, there's just up the road here, there's some very large deposits that BC gets a little bit of a bad rap for having low grade porphyries. If you look at texture, some of their bigger mines,
a lot of 0.3%, a lot of 0.5%.
Exactly, and they're economic today. Of course, the capital costs on those are sunk costs now. But when you get $7 to $10 or $20 per pound copper, you're going to be able to fund these projects. So with that in mind, we want to be in a good jurisdiction, which British Columbia is. We're not going to have our projects stolen off us. We don't have to pay bribes in the Congo or anything like that to keep them. So we're in good shape on that front. You can get things permitted. I've been the chairman and now lead director of Skeena for the past 7 years. We've got the Eskay Creek project, so we know what you need to do to work with First Nations and government to get projects permitted, and so it's a good jurisdiction on that front. And I think British Columbia has the opportunity to become the next Chile in terms of copper project over the next 20 years. So we want to be part of that. We want to be at the lead of that. We've made 2 acquisitions. We acquired the Woodjam project off Bill Morton, and Woodjam consolidated 2 years ago. We just announced the acquisition of Universal Copper, and we closed that deal a week ago. All of these very cheap deals. Universal is a good example of what we're trying to do. There we acquired 2 billion pounds of copper in the ground, 750,000 ounces of gold in resources, a huge amount of exploration upside. Hasn't seen much exploration, that project, at all. It all for the princely sum of $2.5 million worth of stock. I think that'll be one of the extraordinary bargains of this down market. I think we've got a little while longer to go on that front, but you don't want to waste too much time buying copper stocks and buying projects in our case. And we're continuing to do that. We're continuing to look to acquire other projects. So now we've got, within that, 4 billion pounds of copper, getting close to 2 million ounces of gold. Our market capitalisation is only $19 million. These projects have had $60 million spent on them over the years and justified a previous market cap across the 2 companies of well over $100 million. So buying these things cheaply, but within those projects, importantly, there's some high-grade zones. The best drill hole to come out of Woodjam to date was 110 metres at 3% copper equivalent. We know there are high-grade zones. The previous explorers haven't had the money to really test those high-grade zones and get to understand them geologically. So that's one of our objectives this year, is to better understand the high-grade zones there at the Woodjam project, and also look at what we've got at the Poplar project and pull out the high-grade zones there. And I think within those, one of those projects at $6 per pound copper, there'll be a very good economic mine development scenario. So that's the main game. For investors, the important thing there is that we've got a huge resource base in the right metal at the right time, very cheap, and it's only up from here.
So you think that BC is the next Chile, which is an interesting comment, because the porphyries that were discovered there in the 90s and 2000s were, I guess some of the bigger and better ones started around 1% grade, but now they're down into the 0.5% or even 0.4% as the mine gets older. So your strategy, in a way, is to accumulate porphyry deposits here in BC that might have been tossed out for cheap during a lower copper price environment, and then do the work to advance those, move them along maybe to PEA or PFS stage, and then be there at the right time when copper is $6, $7, $8 a pound, or as you said, $20 a pound. I mean, is that kind of the summary of the strategy?
Spot on. And within those projects, look at those higher grade zones to give you a starter project that you can then build from. So build from a higher grade base. If you look at our Deerhorn project, for example, there's 32 million tonnes there at 0.67% copper equivalent. So a good starter project there, even at these metal prices. Build from that and then expand into a much larger production scenario. That also helps you with permitting, of course, because once you've got a mine built, it's easy to expand and to go out and build a bigger project. And of course, we're waiting for capital to come in a major way. I think BHP the other day said that the world needs 250 billion of investment in copper project if we're to come even close to meeting the demand that's coming. So we've got to bide our time to get through to a time when that money starts to flow into the sector and you can really get developing the bigger project.
Craig, thank you very much for your time.
Good on you. Thanks, Robert.